Hello, welcome to Strictly Money. I'm your host, Saijal Patel. Thanks for joining. High inflation looks like it's going to dampen the upcoming holiday season festivities. A new report from Deloitte Canada shows that consumers are increasingly worried about their savings, and so they plan to stretch their dollars and buy fewer gifts as a result. Jason Vickers is the National Retail Transformation Leader for Deloitte Canada, and he joins me now to give us his outlook on the upcoming holiday retail season. Jason, great to have you on.
Great to be here. Thanks.
So I suppose this shouldn't come as a huge surprise, given that we've had endless cycle of negative news, as you've rightly pointed out in your report. But perhaps you can recap. What in particular has consumers so concerned?
No, you're right. I think it really is consistent with a lot of the headlines we've been seeing for the past several months. I mean, the headline of the report is consumers are planning on spending on average 17% less this year than last year. And really, this is the manifestation of a lot of the economic headwinds that we're starting to see. People are starting to see their budgets being pinched as a result of inflation, higher interest rates, or resetting mortgages and making more big ticket items more costly. And I think just people are a lot more pessimistic about the outlook for the economy. So when you look at what their intentions are to spend over the holiday season, it's a little bit more muted than it was last year, for sure.
Yeah. Do you get a sense that they are expecting a recession? I mean, that's dominating the headlines right now.
Yeah, I mean, the way we've asked it is, what's your outlook for next year? And about 1 in 2 Canadians, almost 50%, are expecting next year to certainly be more challenging. We certainly asked the big R word, but that's certainly what Canadians are preparing for, yes.
Okay. So where are shoppers planning to make the biggest cuts, or where are you seeing shifts?
Yeah, so when we ask the survey, we really look at spending over the holiday period because people are off. They tend to do more shopping beyond just for gifts and holidays. So if I were to say between gifts and non-gifts, most of the cut will come from non-gift spending. So non-gift electronics, travel, and non-gift clothes. So those are going to be the categories that are probably going to see the biggest hit if consumers follow through with what they're telling us. I would say things that are more gift related, though, gifts for other people, hosting at your house, entertaining. Those are the segments that are probably going to hold up quite a bit better relative to some of the categories I mentioned at the outset.
Yeah, so it's interesting. I know we have a board that we'll bring up, but non-gifts. So is that gifts for themselves then that they're cutting
Yeah,
back on?
splurging on themselves. And really, if you think last year, right, where were we last year, right? We were in the midst of the pandemic. People really couldn't get out and do much because of the restrictions in place across the country. And people's financial situation was a lot stronger than maybe they're feeling it this year. So I think probably the way a lot of people maybe coped or reacted was splurging or spending a little bit more on themselves to sort of make up for some of the things they couldn't do last year.
Yeah. What's interesting, we have that board as well. So they're looking to stretch their dollars, which makes perfect sense. And it looks like one of the ways is to shop early. In your mind, is that a good strategy?
Yeah, I think so. I mean, it's always one of those things, the more time you can give yourself, right? If you're a procrastinator like me, you probably don't get to that, even with your best intentions. But certainly the earlier you can shop, it allows you to visit more stores, compare prices, compare products, and really wait for that great deal. So, as much as you can, that's always a good strategy. And it's certainly been a trend we've been seeing more and more year over year.
What I noticed as well, just in general, Jason, is that a lot of people are they're moving away from the material things, right? Materialism and towards experiences. And I saw that was quite reflected in your findings. That as well as choosing gifts that are more aligned to their values, like, more sustainable choices.
Yeah, that's right. I mean, this is sort of a mega trend, right? When you look at certainly across demographic cohorts, first to millennials and then, into Gen Z, we're seeing a lot more of these cohorts are looking to spend on experiences versus products, are more concerned about things such as the economy and social responsibility. And they're expressing that in their purchases, both in terms of what they buy, how they spend their money, but also the types of retailers and merchants that they're willing to, visit.
Are they able to, do you think they're going to be able to cut their costs though and keep in line with their budget? Because sometimes, that's a trade-off.
Yeah, that's certainly one of the things. I mean, we sort of charted this year over year, sort of the percentage of consumers. And the way we asked the question was, who's willing to spend 10% more to buy products that are aligned to their values? And this number has been consistently creeping up. This is the one year where that didn't increase, so it's actually held constant to last year. So I think that's sort of the rub that people are feeling. They certainly want to, but in the world of pinched budgets or economic constraints, there's a little less flexibility perhaps to do than there may have been last year.
Okay, we're going to take a quick break and we'll be right back. Welcome back. Jason, the economic landscape is obviously very different across Canada. So do the retail, I guess the outlook, does it reflect that?
Yeah, certainly the number we talked about at the outset was a Canadian average. But if you look sort of by regions, it's a bit of a tale of sort of two parts of the country. Quebec is probably the region where customers are expecting to claw back the least. So really, the spend intentions are very similar to last year. But I'd say that's in the context of Quebecers generally do spend less than the rest of the country over the holiday season. And when you look at sort of where they spend their money and where they spend their time, Quebecers tend to have a preference over the holiday season to perhaps spend a little bit less in stores and tend to gear that more towards, spending time with others, experiences, and really family and friend gatherings. So
Okay.
that's certainly reflected again in this year's survey.
Okay. I want to switch gears and talk about the impact that this would have on the retailers themselves, right? Retail sales seem to have been pretty resilient, in fact, this past year. Is that what you're seeing? And are you starting to see cracks?
Yeah, I think certainly retail sales for the past couple of years have been really for one jumping around a lot, just given all the the swings in supply chains and what have you. But to your point, they have been pretty resilient. I mean, what we've seen certainly in the U.S., you've seen a lot of headlines for some of the big retailers starting to see a big accumulation of inventories, right? So that's certainly one aspect to consider. I mean, in Canada, certainly not seeing it quite to that extent yet, but it's certainly something that I think a lot of retailers are preparing for. And I think it's also important to note, really, we're talking about changes versus last year. Last year was just an exceptional year for retailer in Canada.
Hmm.
So even though we're talking about the difference or the change, really it's maybe potentially bringing us back to a level that's certainly like by recent standards is still quite strong. So I would say retail as a whole is still quite strong. It's just we're comparing against quite a unique year, which is last year.
So what does this mean then for the retailers? The fact that a lot of people are looking to cut back on their spending because they must be very cognizant of the fact that people are price sensitive a lot more than they were last year.
Yeah, I think that's absolutely right. I mean, certainly some of the classic tools, really thinking about, your pricing strategies, how you effectively use promotions, how you draw people into your stores. I mean, one of the interesting points we did see here is people are actually migrating back towards stores. So the percentage of people that are willing to or prefer to shop in the store is actually higher than it's been in the past couple of years. People are planning on visiting more stores. So I think for retailers, probably going to actually expect quite a healthy degree of traffic. I think what you're going to see, though, is consumers that are going to be more discerning, they're shopping around harder. So, from the retailer perspective, having to continue to sort of sharpen their game to really make sure that they are that choice for, dollars that may be a little bit more scarce than they were last year.
Yeah, it's interesting you say that though, because the brick and mortar stores have faced a lot of stiff competition from the likes of Amazon. So how does Amazon fit into this picture?
Yeah, I mean, sort of some of the digital natives, let's say, as the ones you mentioned, they've certainly been, gaining share, quite significantly over the past 5 or so years. When you look at sort of retail e-commerce penetration of retail sales, it's creeping up and up. What I will say though is a lot of the traditional bricks and mortar retailers have done a really excellent job of pivoting their businesses to become more omni-channel. So really being able to serve consumers both in the stores, but then also through their digital channels. There's a lot of talk a couple of years ago of, is retail dead, traditional retail dead, is bricks and mortar something of the past? I think that actually hasn't played out. I mean, you're seeing a little bit of a reversion to historical trends versus something where everyone was expecting that we were going to be in 2030, this year. So certainly there is a very clear role for the store. I think the point though is if you're a traditional bricks and mortar retailer, you can't neglect that online part of your business, but stores certainly aren't dead.
Okay. Jason, we only have about a minute until we end the show or your segment. Supply disruptions has been a big issue for a lot of retailers, and it's forced them to increase prices. Has that worked its way through? Are you seeing evidence of that?
Yes, there's certainly parts of it, right? So, costs are a function of a few things, right? So the raw input cost, what they source from manufacturers, and then it's just the supply chains to get there, plus store labor. Those are the big buckets of cost for a retailer. If you look at supply chain, especially supply that's coming from overseas, whether it's direct products or intermediate materials, the cost to actually ship has come down significantly versus last year. So when you look at, last year, sort of the spot rate of a container from China was in some places $25,000-$30,000 versus a long-term trend of 2 to 3,000. That number has come back not quite to where it was, but it's reduced significantly. So when you think
Okay.
about some of the major headwinds in terms of costs and the disruptions, that is slowly starting to work its way through the system.
All right. We appreciate you coming on today. Thanks so much,
Thanks for your time. Appreciate it.
Jason Vickers. Welcome back to Strictly Money. Small businesses are often the first to feel the brunt of inflation and economic worries. After all, they don't have the pricing power and flexibility to cut operating costs the way that large corporations do. So it shouldn't come as a surprise that an overwhelming majority of small businesses are calling on the government to do more to support them. Jeff Brown is head of commercial solutions at Equifax Canada, and he joins me now. Hi, Jeff. Great to have you on.
Thanks for having me.
This is a personal finance show, as you know, but I think this is a very important topic for us to discuss because small businesses are really, the backbone of our economy. And when we have failures, it has huge ramifications on their savings and retirement and often employment as well. I wanted to ask you, what are you hearing from businesses? What are their biggest worries right now?
Yeah. So, yes, failures and hardships of business owners not only affect the business owners themselves, but those hardships are then passed over to the end consumer as well. So, Equifax Canada ran a survey this past month for about 300 business owners across the country, and 87% said they've been forced to increase prices over the past few months. So, things like this shouldn't really be a surprise because there's a number of factors that have been impacting business owners. So, things like the cost of goods increasing with inflation, cost of capital increasing with increased interest rates, just like the Bank of Canada's announcement today, supply chain issues, demand for increased wages. Really, it's a huge concern for small businesses, and it does impact us as consumers. So it's really concerning because of those surveyed as well. The concern is that 87% of those same businesses have stated that they've had to raise their prices in a move that's going to substantially hurt their business and us as consumers.
Yeah, and raising prices, right? As I mentioned, they don't actually have nearly the same ability to trim costs the way, suppose, big corporations would. Do you get a sense of that?
Absolutely. For small businesses, cash flow is really their main concern right now as well, because it's essentially the lifeblood of how they operate. So kind of following that with the survey, about 60% of businesses said that cash flow is their largest challenge. Outside of rent, the top three expenses they face are products and services, fuel, wages. The rule of thumb with small businesses is you have to be spending money to make money. So in tough times, small businesses, just like us as consumers, really rely on credit. So both from financial institutions and their suppliers. So, during the pandemic, for example, there's 900,000 small businesses that received about $49 billion worth of interest-free government-backed loans. So similar to us as consumers, we're becoming more and more of a nation of debt holders, as we're seeing this now fully transition into small businesses as well.
Yeah, we have a board that came up and it shows the debt levels, right? The average balance, $37,000. Was that mostly due, Jeff, because of the pandemic? And have they been able to make up for it as the economy has opened up?
Unfortunately, no. We're seeing a lot of signs of there were positivity coming out of part of the pandemic here, but small businesses just don't have the same relative flexibility as large corporations. So, and how they operate, they typically run on like razor thin margins. So, especially during the first few years of operating, they have a number of limited staff, limited suppliers they operate with, and have a very fragile supply chain. So, this lack of stability really means that any bumps in the road, like inflation, interest rate, job vacancies, really hit them dramatically harder. So larger corporations, while not immune from these types of challenges, have redundancies in place. They have a multitude of suppliers. They have preferential terms, and really the financial institutions see them as a safer bet.
Yeah. Jeff, if I'm correct, the pandemic loans, they should be due soon, right? And does that not raise concerns that they won't be able to pay them back if they don't have the cash?
Absolutely. I mean, we just saw like debts and delinquencies really kind of charge up here over the past few months, and just with these loans that the federal government offered, they're just in fact that they're loans. They're not a bailout. It's basically a stopgap to help to get them through. So there are a number of concerns. So one of the things that not many Canadians know about is, just like us as consumers, small businesses have a credit score and a credit report. And it's something that you reference when you buy a car, a house, or apply for a credit card. Small businesses face that same thing. So during the pandemic, we've been actively monitoring the negative credit life cycle. So delinquencies, collections, illegal activity, and bankruptcies. And really what happened is there was a bit of a logjam. So delinquencies were basically deferred out by suppliers and lenders. Collection companies stopped doing outbound calls, and courts were essentially closed. So basically all this negative things that could happen didn't happen. And as we open up from the pandemic, that logjam has broken free. And so we're starting to see delinquency rates climb. So more legal action really come through there. So it's a sign to us that not only does that debt level really carrying through, but it's going to get a bit worse before it gets better.
Okay. We have a lot more to unpack here. We'll be back in 2. Welcome back. So, Jeff, we know that they want support, some type of support from the government. What do you think would help?
Yeah, so as I mentioned earlier, that $49 or $49 billion worth of government-backed loans were just that they were loans. They have to be paid back at some point, and interest is going to start to accumulate here in the coming year. So with businesses taking on record debt during the pandemic, and these loans are kind of being positioned as a lifeline, not a bailout, many small businesses are looking for at least some forgiveness just to ease those cash flows concerns. So with the cost of capital really increasing, getting more expensive, it's a justifiable concern for small businesses, especially as we feel like we're heading towards a bit of a recession here.
Do you think that financial institutions also play a role in this?
Oh, absolutely. I mean, they're businesses as well. I mean, they want to be able to play into safe bets as well. And again, with the cost of capital just rising, they have to make sure that any loans that they issue out, any cards that are being issued, are really being done to safe situations too. So you'll see them kind of temper expectations with the amount of working capital loans that are out there, maybe reducing amounts or increasing the associated rates. So it's going to be kind of trying times for small businesses here. Just like we mentioned off the top, any really impact to small businesses is going to then impact us as consumer with increasing prices.
Yeah. There's a lot of debate, Jeff, right now about EI and CPP premiums going up, right? Whether it's a tax or not. Are you hearing anything from the businesses right now? Because, certainly that has an impact on their cash flow.
I mean, absolutely. Not to get into that specifically, but yeah, I mean, it is a bit of a headwind for them as well. I mean, we're seeing it in different signs within the economy as well. So, the pressures that small business face is really evident from the numbers of net new businesses that we're seeing open up into the economy. So, new businesses openings have dropped about 50% between April and June of this year compared to last year, which is really significant. Like typically the springtime is kind of historically the most active time period for new business openings, where we typically see about 90 to 100,000 small businesses open up. So with that 50% drop, it's really a big challenge. I mean, it's not really going to see the impact now, but down the road as well. I mean, there's going to be less businesses out there to be able to put goods out there, which is also going to impact the prices for products as well. So again, it's going to have a long-term effect, not only to other small businesses, but major suppliers who invoice those tens, if not hundreds of thousands of small businesses. So we're going to see a lagging impact here over the next few months.
I'm certainly seeing a lot of businesses even having to shut down temporarily because they're not finding the workers.
Absolutely.
Yeah.
Yeah. I mean, as we talk about this too, you really have to think about, what can we do to help? And as part of that, it's really just understanding your financial situation, just like you talked about on your show and from a consumer perspective.
Yeah.
So really what we've been surveying out as well is like 57% of business owners really understand that they have a credit score, and only 32% of those know even how to obtain it. So the reality is that small businesses really need to be mindful on taking on new debts. They need to ensure that they have a clear picture of their current financial situation, have a plan forward, and before making any commitments that could really impact them in the long run.
Yeah, so let's talk about that because you said in the report that a better understanding of credit would help them and understanding, their credit score. So walk us through some of the things that they should be looking for.
Well, absolutely. I mean, if we kind of reverse back to the start of the pandemic, I mean, us as consumers, you're able to ask for deferral on your mortgage, deferral on your car loan. I think for small businesses, as we enter into a potential recession here as well, you almost have to adopt that same mindset. Is be very wary of your core debts that you have to take on, your obligations, and really start talking to your suppliers. Ask for deferrals, talk about the rates that you receive, open up your financial books a little bit to let them know exactly where you stand. What we found during the pandemic is a lot of small businesses didn't know that was even an option to ask for things like deferrals. If you're going through a hardship here over the next month or two, maybe you are having a tough time finding net new workers, or you have to increase your wages, it might be a temporary stopgap where you have to ask for other measures by, again, working capital loans or asking for, payment deferrals to your large suppliers just to be able to open those up a little bit. So adopting some of that kind of early pandemic mindset is really going to help a lot of small businesses kind of ride into what looks like us entering into a recession.
Okay, that's very good advice. So pull up that business credit report and run through that. Thanks so much for coming on today, Jeff. We really appreciate your insights.
Thank you for having me.
Jeff Brown of Equifax Canada. Well, that wraps up this edition of Strictly Money. Are you planning on trimming your holiday spending? And if so, what's your strategy to stretch your budget? Let us know. Meantime, thanks for watching. We'll see you again next week.